Gold prices were back in the red on Wednesday morning, giving up gains from earlier in the session, and that dramatic 5% plunge in the previous session was the market story of the week. Silver's bouncing, miners were whipsawing, and markets still lean towards a Federal Reserve rate cut next week after this year's blistering run in bullion. Well, economist and market veteran Lynette Zang joins us now to unpack some of those developments. Lynette, it's a pleasure. Thanks indeed for talking to us.
Oh, I'm very happy to be here, Devan. Thank you for having me.
Well, look, after a record on Monday and a 5 to 6% drop on Tuesday, and then again gold red in the morning, what's it telling you about what's happening with gold and what it's doing at the moment? How are you seeing this?
Well, first of all, I am seeing this as a purely technical, well, not a purely technical correction, but absolutely a technical correction, because gold was overbought, not overvalued. Those are two different things, but from a purely technical position, nothing goes straight up, nothing goes straight down. You got to have your bouncing along the way. So that would be one thing. And I'm not even sure, even with these 2 days of corrections, I'll be looking at that this weekend, that we are still not technically overbought. Also, there's been a backwardation in both the gold and the silver markets, meaning that the current price or the price for getting your hands on the physical today is higher than going out into the future. So that is a flip, because that's not normally the way that it is. And I think part of it is that current market, the physical market, is actually taking over, directing price discovery from the paper markets. This is a huge flippin' big deal. And it really didn't start now. It really started last January, because in the US, primarily we work with paper markets, right? So they're just trading contracts back and forth and moving the price that way. They can create as much gold and silver as they want to, and the market reads as if it exists. But in reality, anything physical, there's a finite amount of it. Even if it's indestructible like gold is, there is still a finite amount of it. And so when you have a surge in demand, which comes from the industrial side as well as the investor side, as well as the central bank side. I mean, they've actually been accumulating gold at the highest level over the last several years, 4 years, I think. But in reality, they started accumulating in 2005. That trend started to shift. So this is not something that's new either. But in the physical world, when you remove that availability by buying the physical, it's not there anymore. And so there is, because just this little correction isn't going to do it either, a huge shift. And I mean, I think the lie of the paper markets is being discovered. And I'm curious to see what happens. We haven't seen this yet, but the Bank of England was instrumental in shipping gold across to the US, and that gold was then delivered out, and the levels that they have in their warehouse of gold, and these are other countries' gold, because the Bank of England doesn't have much gold of their own. I mean, what happens if those countries ask to repatriate, ask for their gold back? That firework lies yet ahead, and I think that part of the pullback is about modifying or regulating the way the public sees what's happening in the physical metals markets, in the gold and silver markets.
And it's that same public, and perhaps even the would-be or investor, looking up and saying, well, there may be a reset coming. Does that fit into what you were saying here?
Yes, my dear. I have been actually talking about the reset, was one of the first people, if not maybe the first person, I don't know. But in 2009 is when I listened to a 28-minute interview with Christine Lagarde. And you have to understand, I've been in these markets on some level since 1964. Okay. And I just turned 71. So I've been around. I've been a stockbroker. I've been a banker, and I've studied currencies and currency life cycles since I was a stockbroker at Shearson in 1987. So in 2008, during the financial crisis, there was not even one teeny weeny doubt in my mind, but that we were at the very end of the system and that the current system had died and then was put on, free money life support to reflate the intangible and real estate, the different markets that were targeted for it, and also to set up the new system. So is there a reset? 100 bazillion%. We are inside of a reset. This did not just happen because when one monetary system dies, another one is born. And what gold and silver are, sound money that cannot be inflated away. And we can come back to that. But that's your bridge to hold your purchasing power intact and also take advantage of opportunities till you get to the other side of this.
Let's throw in something else in the equation, right? Everyone is pricing in that 25 basis point cut in interest rates next week by the Fed. How does that interplay and set the path for gold and silver into November?
Oh, my goodness. First of all, one of my very favorite websites is the Federal Reserve Education Department, the FRED. And if you go in and you look at financial conditions, you will notice that the financial conditions are as easy pretty much as they've ever been. So by lowering the interest rates, what that into an already very easy money environment, that means more inflation. That's what that means. And more inflation means that the public sees this and loses even more confidence. And obviously, see, here's the thing, Devan. People look at the spot market and they think that that is reflective of the true value of gold and silver. It is not, or food, or energy, or stocks, or anything. There was a time when that was more reflective of what was happening in the economy. But quite honestly, they started the financialization process right in 1971. You see it the most really kicking off in the early 80s as this last piece was going into play. Now, everything, other than those that are about to be tokenized, have been turned into a financial product and traded back and forth. So the amount that you pay for your energy bill or your food prices, let alone gold and silver, that's not good price discovery. We aren't getting that anywhere. So I personally believe that it is 100% critical that people understand the true value of anything. Right? We can do that. That's called the fundamental value, not the Wall Street, what they want you to think of is even intrinsic value. So how do you know what that is? Again, if you go to the FRED and you pull up purchasing power of the consumer dollar and you look at the bottom on left-hand axis, the Federal Reserve is telling everybody that the true value of this garbage is zero. Why is it zero? Because it costs them nothing to create it. And once it's digital, it'll cost them even less. Whereas this is fiat money. This is sound money. And it's sound money that can't be inflated away. So they're both money. It's just the flip side of the same coin. So how do you know how much an ounce of gold is really worth, regardless of what Wall Street says? You take all the debt that's been created, because that's how money is created in this system. And you take all the gold that exists, whether it's above ground or is still in the ground, and you divide all the debt by all the gold, and that gives you a number. And while I'm not going to get you to the penny, I'm going to get you pretty darn close, actually quite conservative, and that's somewhere in the vicinity of $40,000. So
that's eyebrow raising indeed. Now, against that backdrop, if I can just interject there.
Yeah, please.
What's happening with investor flows right now? I mean, are we seeing meaningful ETF outflows, minor weakness, or broader, deleveraging in precious metals markets?
Well, first of all, if you're talking about an ETF,
Yeah.
you, the investor, don't own anything but a share in a trust. And the purpose of the ETF is to mimic the manipulated spot market. And also, if you look at a long-term chart on them, and you put in, like, stockcharts.com is free. Anybody can do this. You look at a relative performance chart and you'll put in the spot price of gold and then you put in GLD. And what you will see, and you can do this in their 10K, their financial filings as well, is they sell off parts of their gold holdings and silver holdings in SLV to pay their ongoing daily fees. And the financial report tells you how much that is on an annual basis, but the relative performance chart shows you the spread, the difference between the GLD spot price and the holdings and spot gold. So it's a diminishing asset. And I have to bring that up because people think that they own gold when they buy a GLD or they own silver when they buy SLV, and they don't. They own shares of a stock. They have no access to the underlying metal that is being systematically on a daily basis sold off. So I kind of went into things away from what you're talking about. But when I'm looking at
that context is extremely relevant in order to sort of, assess what you're looking at, right? But for mining companies, and if I can just get your take on this, Lynette, with prices hovering around the recent highs, which metrics should we watch? Production cost, CAPEX, discipline, merger and acquisition appetite? What is it we put our eyes on?
How about royalty fees? We have to pay a lot of attention to the governments around the world. And, there's all different ways to confiscate. And there are a number of miners, let's say in Africa is a great example of that, where their currency is hyperinflating and their miners are forced to buy like 20% or sell rather 20% of their production in that local currency that is obviously going away. So you do look at the production costs, but that's going to be impacted by inflation and how deep you have to go, et cetera, et cetera. But I pay a lot of attention to governments and how they are encroaching on the miners, because they don't want to say that it's confiscation because they don't want you to understand. But if they raise their royalty fees and other fees and access for the miners, I think that's a huge, huge problem.
And especially in the political and social context that we're in, that makes it very intriguing indeed. Well, look, I'm afraid that's all we have time for, but it certainly has been compelling. Thanks very much indeed, economist and market veteran Lynette Zang. Thanks indeed for your time, Lynette.
Oh, it's been a pleasure.